Global stocks rallied to kick off the new year. London's FTSE 100 broke above 10,000 points for the first time ever, boosted by mining stocks riding record high gold and silver prices. Now in Asia, South Korea's Kospi hit a new peak as Samsung Electronics jumped 7% on AI optimism. And Hong Kong's Hang Seng climbed nearly 3%, led by tech. And BIDU surged 9% on plans to spin off its AI chip unit in a Hong Kong IPO. And on Wall Street, U.S. markets are looking to build on last year's strength. The S&P 500 jumped more than 16% in 2025 and the Nasdaq 20%. And gold and silver are still shining. Gold is around $4,380 an ounce after its biggest annual jump in 46 years. And silver is near multi-decade highs, more than doubling last year. And this is crazy, but a barrel of oil is now worth less than an ounce of silver. Attention is on the Fed. President Trump is set to nominate a new Fed chair soon, and markets are betting on a dovish pick, and they're already pricing in a couple of rate cuts in 2026. Now, in corporate news, Tesla just hit a speed bump. The EV maker delivered about 418,000 vehicles last quarter, down 16% from a year ago, and a bit below forecasts. And that puts Tesla's 2025 total at 1.63 million, below 2024's 1.78 million, a second straight annual decline. Blame rising EV competition and the phase out of U.S. tax credits. And Elon Musk said he'll really refocus on Tesla in 2026 after juggling other ventures, so investors are watching to see if he can reignite growth. And in crypto, will 2026 be a rebound year? Bitcoin is hovering in the high 80,000s. After a wild 2025 that saw it surge past 126,000 before plunging to finish the year slightly lower, its first annual loss since 2022. And bulls are optimistic heading into the new year. Tether, the largest stablecoin issuer, just bought nearly $800 million of Bitcoin to start 2026, a signal of confidence from a major player. Plus, the industry is on better footing after the U.S. passed a landmark stablecoin law and regulators eased off crypto lawsuits in late 2025. Warren Buffett has retired. The new CEO is Greg Abel. I don't often invest in companies when founders retire or when founders are distracted, like when Elon bought Twitter or was running Doge. Berkshire is down more than 6% since Buffett announced his departure in May. And other top executives announced their retirements too. And of course, we know Charlie Munger passed away, God bless him. Berkshire is now sitting on a record $358 billion in cash. The condo market is getting destroyed with the worst annual price declines in more than a decade. The issue is that why would we buy condos in a city when COVID has taught us that we can work remotely? And if the internet was invented before cities, would we still live in cities? Now, I'm bullish on residential, non-city-based real estate in the long run, but not the urban condo markets. Now, always invest for the long term. And before investing in anything, always ask yourself, will this investment be more or less relevant in 5 or 10 years? China's trade surplus was more than $1 trillion in the first 11 months of 2025, and Trump's tariffs make much more sense on China. One of the issues is that China subsidizes many of their exports and their currency is materially undervalued in my humble opinion. Now, recall that Japan was so powerful in the 1980s that the U.S. forced the yen to go up a lot, which really hurt the Japanese economy in the 1990s and until today. And the U.S. needs to find a way to make the Chinese yuan more expensive. On the economic front, weekly U.S. jobless claims came in lower than feared, and markets are now focused on the December non-farm payrolls report coming out next week. Now, Sachs Global is about to file for bankruptcy because it took on way too much debt to buy Neiman Marcus. I don't understand why people invest in retail companies that compete with online giants like Amazon. Remember the 5-year rule before investing. Ask yourself, in 5 years, will this sector and the company be more or less relevant than it is today? And this is going to stop you from getting seduced into buying companies that are cheap for a reason. Meta bought Singapore-based AI company Manus for more than $2 billion, and this is a huge deal, as the United States antitrust has blocked many smaller Meta acquisitions, but it is unlikely to block this one as it has roots in China. And you might be thinking, why hasn't the US broken up big tech companies like Meta and Alphabet? It's likely for national security reasons. Meta and Alphabet thought they would be broken up by now, which is why they rebranded as Meta and Alphabet. Now, Google owns the two biggest search engines in the world, meaning Google and YouTube, and Meta rebranded from Facebook because it thought it would be broken up by antitrust into at least three companies, meaning Facebook, Instagram, and WhatsApp. Now, I personally expect more US-based tech deals to be blocked, but not anything that directly or indirectly touches China, especially when it comes to AI. And the Manus acquisition could be Meta's smartest acquisition since they bought Instagram for only $1 billion in 2012. And Benchmark Capital, one of the best VC firms on the planet, led a massive investment in Manus. And Benchmark previously invested in eBay and Uber, as shown in the epic miniseries Super Pumped, The Battle for Uber. Two Chinese entrepreneurs founded Manus' parent company in 2022. In conclusion, it's a high-energy start to 2026. Buckle up for an exciting year. Happy New Year, and let's make this a profitable one.